Good evening. It's Saturday, August 19th, 2023. It's almost 7 p.m. on the East Coast. This is Robert Sin at CEO Technician on Twitter, at Goldfinger on CEO.ca, and you're listening to me on my YouTube channel, Goldfinger Capital. This video is going to be pretty lengthy, warning, but it will be split up into different parts. You can skip to the sections you're more interested in. My goal is to really give a thorough, comprehensive market update, go through all the stuff that I'm looking at, talk about the week that was, where we're at heading into next week, even discussing Fed Chairman Powell's Jackson Hole speech this coming Friday, and even getting into a little bit of junior mining. So let's get right into it. In the span of just about 3 to 4 weeks, the overall market, the overall stock market environment has transitioned from one of complacency and investors feeling pretty good about things and a bit overconfident to one of palpable fear and pretty negative sentiment at the end of last week. I don't think many people are very bullish on the overall market environment this weekend, heading into next week. We can talk about why that is, what's caused this market drop in August. I don't feel that's a very valuable conversation. I do think there is a lot of concern about China definitely causing a lot of it, and the rise in Treasury yields has also been a bit problematic. The 10-year coming up above 4.3% last Thursday definitely is not a positive for the equity market. That being said, Friday we gapped lower at the open. The E-mini S&P got down to around 43.50 at the lows, and we ended up slightly green on the day, closing near session highs. So that offers a small positive sign, I guess you could call it. It was a Friday. Markets were under pressure in the morning, so bulls did step up there and they managed to close it positive. I think that early next week will be pretty important to see if we can get some confirmation of Friday's green candlestick. But I also have to think, okay, we're still in August, end of August. We've got Jackson Hole speech on Friday. That's going to be the market moving event next week. So the action early in the week, I really don't think we will see much above, let's say, 44.50, even if we do get a bit of a bounce. And certainly Friday's low, again, I'm talking the E-mini futures here. We could call it 433 on the SPY, 43.50 on the E-mini futures. That's a sort of a key line in the sand here now on the downside. I would be surprised if we got under that level, 433 on the SPY, early in the week. Obviously, if Powell comes with a hawkish speech on Friday, then anything is possible. But I don't think that's likely, and I'm going to talk more about that later. The Russell 2000, the IWM, we came down to the 200-day moving average. I mean, this is sort of a textbook spot for a bounce. We're really oversold. The IWM was down 5 sessions, in a row Friday morning. Snapped the streak with Friday's green candlestick and 54 basis point rally. So there's kind of a really textbook spot for bulls to make a stand there, and they did. So if we just review a bunch of different charts, a very large, diversified global mining company. This is BHP. I just look to the left on the chart. 55 is a big support level, and there's even an open gap right underneath that going back to last November. So this is a stock that has basically gone down in a straight line in August, and it's at It's right at big support there at $55. This will be a chart to keep an eye on next week. Obviously, big miners are very affected by China sentiment. Tesla, also another big multinational company, $1 trillion company that is greatly affected by China sentiment. And this one has also had a dreadful month of August so far, down about 15%. And it's really oversold again. And look to the left on the chart, the 215 level is pretty big support. 210 to 215, call it. It's more of a zone. Uh, major area of potential support in the Tesla chart. And obviously the RSI, the daily RSI is under 30. So we are definitely in oversold territory. This would be a spot where you could expect a bounce. And if we do not get a bounce here, with Tesla being as oversold as it is, that would be a really bad sign. Albemarle, another mining and chemicals company, definitely a China play. Very similar chart to Tesla, just basically straight down for the last month. And look to the left, 180, definitely a big support level. So deeply oversold. So a lot of these China sensitive stocks, these large cap, mega cap China, sensitive stocks are all deeply oversold, been really beaten down here in August and sitting at or very near key support levels. So they're definitely stocks you want to have on your radar next week. If we're going to get a big rally in the S&P, or at least a bounce back rally, these stocks are going to have to start to move up, at least stop selling off every day, right? Freeport McMoRan. So this is a copper gold miner, actually the largest copper miner in the world now. Its chart is better than some of the other miners out there. So it's still in an uptrend, still a rising 200-day moving average, but it also has had a bad month of August so far. It'll be interesting to see if this one can get back above that 200-day moving average and maintain the uptrend. A series of higher lows still intact here on Freeport. But then also, look back to January. You could say, well, it just made a lower high here this summer. Caterpillar. So this is China sensitive stock that hasn't had a big drop. I mean, yes, it's pulled back here in August, but still very close to the highs, still very much in a pronounced, clear bull market trend here for Caterpillar. So there are some companies holding up a lot better than others. And as you dig through the various sectors of the market, like the oil sector, still very close to 52-week highs here in the OIH. So, as we look through the overall market environment, it's not been a sell-off across the board. There's been a lot of sector rotation, and some of the cyclical sectors that you would expect to drop if China is really in a big economic downtrend or having a debt crisis, as it appears is playing out, you wouldn't expect Freeport McMoRan, Caterpillar, and the big energy companies to still be in strong uptrends and have some of them still hugging near 52-week highs, right? So it's a messy, murky overall market environment. But it's clear that many of the China sensitive stocks are hanging on for dear life here, after a very big beatdown here in August. Turning to some charts that I'm interested in here, some charts that I have on my radar for early next week. One of them is American Airlines, AAL. So again, talk about a pronounced downtrend and a very bad last month. I mean, this has basically gone from 19 to 15 in a straight line in the last month here in AAL, American Airlines. And I hear some people saying, well, I think the economy is stronger than expected, and that's why Treasury yields have gone up. Well, if the economy is doing so well, and the average American is so full of cash, in their savings account and spending it so freely, why is American Airlines now technically in a bear market, down more than 20% in the last month? That just doesn't uh, make sense to me, right? It just it doesn't add up that the economy is doing so well, yet so many of the companies, the stocks that are so sensitive to the economy are now in clear downtrends and hanging on for dear life near major support levels like AAL is, right? uh doesn't add up, right? It doesn't quite add up. So that kind of plays into the next topic about why I think gold miners are actually really set for a bounce, and why I think the 10-year note yield may have just double topped. So purely from a technical perspective, uh, this is at a major support level here near 15. AAL formed a head and shoulders bottom back in April, May, broke out in June, and it went from 15 to above $19 a share in about 6 weeks, right? So a tremendous rally there earlier in the year. Well, now it's made a full round trip back to this neckline, so back to the key breakout level, and this is a level that you'd be looking for buyers to show up here, the same place that they bought it really aggressively back in June. So, yes, it's oversold. It's at a major technical level, key support level, and the overall market is set up for a potential bounce next week. So, this would be on my radar for a bounce play, going into next week. A stock that is actually bucking the downtrend here in August is Lululemon. So this is a very specific technical setup, and actually a fundamental setup as well. This is a retailer, yoga apparel, uh, but they've actually knocked the cover off the ball here in the last couple of years, really branching out, making men's clothing, making collared shirts. They make yoga mats, they make hats. Obviously, the yoga pants are the bread and butter here for Lulu. Uh, this is just a company that is doing very well fundamentally, and they are executing at a very high level. And I wouldn't be surprised that then when they report earnings at the end of this month, that they beat expectations yet again. And just looking at this from a technical charting perspective, the fact that Lulu is holding up near its highs for 2023 in an overall weak market environment, that is the kind of relative strength that I actually want to buy, right? And you have a breakout level here, 395. That's a key breakout level. In fact, we could pull this out to a longer time frame, and you can see, yeah, I mean, this is price memory going back a couple of years. And if it breaks out above 395, it has room to run well above 410, 420. Definitely a lot of upside available on the chart. Uh, as far as potential downside goes, I'd be looking for support at 365, and then the 200-day moving average near 350. Some of you might be looking at all the different gaps on this chart. There's a gap higher here. There's another gap higher here. There's a gap lower over here. This is just how this stock trades. So you have to be well prepared for the potential, especially if you hold it into the earnings, that it's going to gap on you. Okay. It could gap either way. It's a volatile stock. But from my estimation, this is the kind of a chart setup that I like, where you have clear signs of relative strength. I understand the fundamentals. I understand what the company does, and I understand why they could beat earnings here in a couple of weeks. Another company that is exhibiting relative strength, Chemical CCJ, uranium, and nuclear energy. I don't think this is one you need to overthink. Clearly, the fact that it's hugging up against 52-week highs while the overall stock market environment has been very weak throughout August, that tells you everything you need to know. Okay, this is a secular bull market, and this is a company that is in the sweet spot of a major transition. The nuclear energy, renaissance, is what some are calling it. So CCJ is one. I don't think that you need to overthink. Clearly, this is in a strong uptrend, and the fact that it's holding up at 52-week highs while everything else is getting sold off speaks volumes. So this is the 10-year note yield chart. Obviously, it's had a big move up since May from 3.4% yield to 4.25% yield. That's a seismic shift in the Treasury, yield curve. And yeah, I mean, I think it does tell you something that about how a lot of investors think that the economy is stronger than they had previously forecast. But it's kind of funny how these pendulums shift. In May, people were more pessimistic, and so they bought long end of the curve. They brought the yield down to 3.334 area. Right now, they're thinking that the economy is much stronger than they previously thought it was. There's no recession now in the cards, and so they sold the long end down to 4.25 or 4.3% yield. And I think there's actually a lot of signs just as we look through the various charts out there. There's a lot of signs that maybe there is weakness actually here in the economy. And maybe the consumer is actually about to be tapped out. Maybe it's not clear yet in the data, but maybe it's about to, become apparent. In fact, if we look at this chart from JP Morgan, savings have been drained since 2021. So people built up all this savings during 2020 and early 2021 when they really couldn't spend it very easily, and a lot of the country was locked down. And they have spent 2022 and 2023 spending it at an alarming rate, way faster than they saved it. And we have debt piling up all over the place, whether it's car loans, mortgage debt, or really high interest rate debt on your Visa or MasterCard balance, right? So the consumer has actually not only gone through all their savings from the pandemic, but now they're actually tapping into debt, right? So this is from $2.1 trillion of excess savings, now negative 91 billion as of June. That's as of June. So we're in August. So 2 months later, it's going to be even lower. So there's a lot of evidence the consumer is increasingly tapped out. Housing affordability, worst housing affordability in history. So some areas of the country, the 30-year fixed rate mortgage is up to 8%. 8% is an onerous rate of interest to have to borrow hundreds of thousands or millions of dollars at. Okay, it totally changes the math on buying a house. So housing affordability is through the floor. So the fact that real estate and housing prices are at highs, at very high levels, and the consumer is increasingly tapped out and cannot afford to buy that high price real estate, it creates a situation that's just kind of untenable. And obviously the market is at a bit of a standstill here, but I think it's going to have to clear eventually. And what that means is either mortgage rates are going to have to drop a lot very quickly, seems unlikely, or prices are going to have to drop. There's only two ways it can happen. If I just look to the left on the chart, so this is Captain Obvious technical analysis, but simple usually works better. There's the potential for a double top here to where yields peaked last October. Coincidentally, the end of last October, early November was actually a great time to buy gold. And just let's take a look at the correlation here with gold and 10-year note yield on the bottom. Pretty strong negative correlation, just like there was at the end of October last year, right? So obviously, as the yield has risen, the price of money has gone up. The price of gold has gradually moved lower. And if there's a moment for a reversal to take place, well, if I look to the left on the chart, it would be around here, around a 4.3% yield. And there's actually a really good JP Morgan note. I'm not going to go into it in great detail, but basically, to summarize this note from JP Morgan, they think that yields are well supported here. They don't see much further move up, and they actually recommend tactical longs in the 5-year Treasury. So sort of the belly, the center of the yield curve. But obviously, if the 5-year yield drops, if price moves up, it should support the 10-year as well. And we're not going to get into bond math. Gold. Obviously, gold has not had a good month of August, dropping from the high 1900s around 1980 down to 1916. And this is in the future. So actually, the spot is now under 1900, but we're going to use the futures. Just clearly, 1900 is a big level. You don't have to be a rocket scientist to see, as you look to the left on the chart, 1900 is a big level. 200-day moving average is right around here. The daily sentiment index for gold is at 16. So not extreme. Extreme is single digits, but sentiment is obviously very weak. And there's a lot of bears pounding their chests right now. In fact, it's kind of interesting on Twitter. I posted this chart of VGCX. So this is a mid-tier gold miner in Canada. They mine in the Yukon. Their all-in sustaining cost of per ounce of gold is a little over $1,400. So still, at 1,900, they're still very much, in the green. But the market just hates this stock. They hate a lot of mid-tier gold miners here. They just don't think that the scale is good enough. I mean, this company generated, I think, 160,000, 170,000 ounces of gold last year. This year, they might mine 175,000 or 180,000 ounces. It's just not interesting enough for the market, quite clearly, and investors have sold this down. So just simply with the gold price dropping about $60 or $70 an ounce, costs have stayed pretty high. They're not falling, right? So if the price of gold they're selling at is 1,900, the cost to mine it is 1,450, their margin is 450. And they have a lot of fixed costs as well, corporate overhead, and just add it all up, and the market hates this stock, right? So the PE ratio is something around 20. So the net income around 20 or $25 million, market cap around 450 to 500 million. And I looked at the comments here. A lot of the comments are smart comments, like this guy talking about how the all-in cost has gone up $460 an ounce from 2019. Gold price is 1,900. It was 1,400 in 2019. And then some people talking about why the market doesn't like, this specific mining company. And then even a mining CEO says that public gold mining companies should go private. Okay. Again, a comment on OPEX has gone up, right? And just very negative comments from a lot of people saying that gold miners is just a great way to burn money. And obviously, if we look at the performance here in the last month and since the top in May, yeah, it has been a good way to lose money. But it seems like sentiment is really extreme here, extremely negative. Small green shoot is silver did not make a lower low at the end of last week, and it's actually finding some support around 2240, 2250. And obviously, again, look to the left on the chart, key support level, a lot of price memory in this zone. So gold very close to big support at 1900, silver at support around 2250. And the GDX, well, the gold miners almost down to support. 27 is clearly the big level here in the gold miners. And, it's interesting. On Monday night, I made a video talking about how I was long gold miners. I thought we were going to have a bounce last week off of what I thought was support at 29. Well, that support melted like a gold bar that's being heated up to over 1,000 degrees Fahrenheit. Um, and that was just maybe a little too complacent on my part, that this market was going to really test us and go to extremes, right? And so that's what happened last week. Really ugly week. And the fact is that this was a double top, right? Some people might say, okay, it's a head and shoulders. We talked about this. I've talked about this several times in the last few weeks. I'm not fully convinced of the head and shoulders interpretation, but I am convinced of the double top interpretation. And if it's a double top, well, it's going to return to where the rally that created the double top started, and that's over here. So just if I stick to my own analysis instead of maybe some hope for a rally last week, uh, I would have stayed on the sidelines and waited for the trade to come to me, right? And so this is the level. Call it 27. You could say, well, it's 2680. Well, somewhere in that area. This is big support here for the GDX. And the fact is that we're really oversold here with the RSI under 30. Could it get more oversold early next week? Absolutely possible. But I think the odds are definitely starting to shift more favorably to going long, as opposed to going short. Also, we have a death cross where the 50-day crosses under the 200-day. Death cross is just simply confirmation of a downtrend. Well, we can see it's a downtrend. And very often, when you get that death cross, 2-3 trading sessions following the actual death cross is usually a good time to buy for a trade. More often than not, that's going to be a signal for a little bit of mean reversion. So we'll have to see if that comes into play next week. I definitely think that, going back to the Jackson Hole thing, I definitely think the combination of really negative sentiment on the gold miners, a potential near-term peak in bond yields, and the fact that I think that Powell is most likely to talk about how the Fed can start to be patient now, that at 5.5% on the Fed funds, with all the tightening the Fed has done, with quantitative tightening, the balance sheet continuing to contract, the Fed can be patient. They don't need to hike in September. I think he'll continue to say, we're going to look at the data. We're going to focus on the data. we could hike more if it's called for, but I think he's going to stress patience and give a hint that the move just might be to hold steady for 6 months, not cut, not hike, just hold steady, let the positive real rates that are now in effect across the yield curve, let that take hold. That is absolutely weighing on inflation. That's pushing down on price levels across the economy. The price of money has gone up. Financial conditions have tightened considerably. And if the Fed just holds steady while the balance sheet continues to contract, financial conditions will get tighter. I really don't think that inflation is the problem here. The Fed does not need to do anymore. So I expect him to give a little hope to the market that the Fed is done. He's not going to make it official, but I think there'll be enough clues in the speech that the market will generally like it. Okay, that's my take right now. That's my opinion. That's all it is. Absolutely meaningless. My opinion on what Powell is going to say on Friday, and a $10 bill will get you a latte at Starbucks, right? Near term in gold futures, bulls need to get above this peak from last Thursday is around 1933. That's the first level where a rally above that, okay, there's some hope a bottom is in. But until we can get above these moving averages, I mean, just, this is a 30-minute chart of gold futures. Just notice how well the trend has stayed intact for the last couple of weeks. I mean, this is just a clear, pronounced downtrend on multiple time frames. So for bulls to really have any hope that a bottom is in, I think we need to get above 1935 in the futures. So that's about $17 above where we closed on Friday. So, but I would also expect 1935 to be a resistance level, right? I think 1900 is big support. I think 1935 is key resistance in the near term. To break out of that range would give us some information. I mean, obviously, if gold breaks down through 1900, that is a new level of a bear market. Okay, right? That's a new level for this move down that started in May. Back above 1935, there are some green shoots that maybe the bottom is in for this correction. We talked about GDX, Newmont again. So I've tweeted this chart many times in the past couple of months, and this is such an ugly chart. This is the largest gold producer in the world. This is not indicative of a bottom in gold. Just the fact that Newmont's at year-to-date lows. It's very close to 52-week lows. It's in a pronounced downtrend. It's not showing any signs of life. Now, maybe some of the problems for Newmont are company specific. I know they have a big mine that's shut down right now. There's labor issues there. There obviously some of the issues here are just due to the company itself, but it's also very much of a proxy for the gold mining sector more broadly and for gold. I mean, if gold is going up and investors want to get more exposure, fund managers buy Newmont, right? So that's just there's no evidence of that right here. So this sector, this chart, and this sector needs some time to form a bottom and give some evidence of a change in trend. At this point in time, we have no evidence of a change in trend or a bull market in the gold sector, period. This is something that I shared on co.ca about just Newmont's all-in cost assumptions. The fact that they have now shifted everything in their financial statements and in their corporate strategy to a gold price assumption of 1400. So basically, they are assuming now that they cannot make money as a company at $13.99 per ounce gold. So all of their planning is assuming that their cost per ounce is $1,400 here. And so that's a major paradigm shift, because this was previously 1,200, and then even going back many years, it was 1,000, right? So this is real acknowledgement of the rise in mining costs in the last several years. We talked about the VGCX chart on the TSX, and this is brutally oversold, and the fact that this tweet got 20,000 impressions really tells you how palpable this poor performance in gold miners is. Now, obviously, a lot of my followers are gold investors, mining stock investors. But that being said, this is a very large amount of engagement and attention to a relatively simple tweet with a very ugly chart, right? And many of the comments to this tweet are characteristic of a sentiment extreme. Just people have really given up on the gold mining sector. A rare bullish gold miner chart. So this is Snowline, and obviously this great chart that it has in its year-to-date gain is company specific, and the fact that they have had incredible results with the drill this year. Their exploration program in the Yukon is going very well so far, and the market is clearly giving full acknowledgement of those results. So I show this chart to say, well, if your company is doing well enough, you can buck the overall market trend or sector trend, but it's not easy to stand out from the pack like this. I am gold, so this is IAG, very much like the chart I tweeted. They got 20,000 impressions, right? So a lot of this selling is just sector selling. It's mid-tier gold miner selling. It's mindless selling. It's not really focused on the fundamentals for each company. It's more of just funds want out of gold miner exposure, and they just sell down a basket of companies, right? I could show you another 10 charts that look very much like this one. So IAG, IM Gold, actually is really oversold here. This is extreme oversold. Look to the left on the chart. Support level around 210, the March low. So you have a clear price reference point there, and just a little bit of company specific fundamentals. They have a very, very large, potentially high margin mine called Cote Lake coming online next year. So first gold pour in early 2024. And this is a mine that will produce nearly 400,000 ounces per year once it's in full swing, right? So that's a company changer. That's a game changer for IM Gold. Now, obviously, we have to see it happen, and we know a new mine startup can be a tricky proposition. So there is risk for sure. But if it goes anywhere close to plan, I expect a year from now, IAG will be significantly higher than $2.12 a share where it closed on Friday. I am long IAG right now, and I'm about to talk about, down to the end here. So I'm going to clean up some of these charts to make it simpler for us to talk about two more. AAL, I'm not long right now, but I might take this trade Monday or Tuesday. Lulu, I'm also not long right now, but I might take this trade as well. So the only one I am actually in right now is IAG. And now we're going to talk about two juniors that I am long of. So Bay and AE. So this is, American Eagle Gold on the TSXV and Aston Bay on the TSXV. So also look at this chart. So it's been a shitty month of August for a lot of junior mining companies, for a lot of stocks across the entire market. various sectors. Aston Bay has gone from 4 cents to 24 cents. How did that happen? New discovery, or potential for a new discovery. So the drill results can be game changers, right? They can make a stock rise 200% while the sector is dropping 30%, right? But few companies are able to do that, and they're definitely hard to come by, right? So let's just talk a little bit about Bay. I'm not going to go into a lot of detail because this is already a long video, but the reason why this is so exciting, first of all, let's take a look at where this is located. So let's go with the negatives first. This copper property that, Aston Bay, and they need to actually update their presentation because this is not correct. They've optioned 80% of this to an Australian company called American West Metals. And I think that American West Metals has actually spent enough money now at Storm to earn in their 80%. But the good news is the other 20% is fully carried to production. So that means that Aston Bay doesn't have to spend any money until, like American West has generated a bankable feasibility study, like really advanced this project a long way and is ready to actually start getting permits and then pressing the green button to actually start a mining operation. So that's in this location, having a fully carried interest is a big deal because a lot of money is going to have to be spent to continue to advance this. This is right by the Northwest Passage. So we are in the Arctic here. This is an expensive place to explore. This is an expensive place to operate, very far-flung location. But it's a very interesting location from an exploration standpoint. And let's see if I can explain this very simply. There is a very clear zinc area of this project over here that has been explored. It's been drilled, and it's very clear there's a decent sized zone that hosts this stratiform zinc over here. There's also a near surface copper zone that has been drilled, and it's generated some good results. But maybe the area, the scale of this near surface zone is not at the level yet that you would think I can build a mine in the Arctic, right? And so this new discovery, what has caused this rise in Bay and American West shares have gone from like 6 cents to 35 cents in Australia, is deeper drilling. And the discovery that we still need the assays to give full confirmation, but all signs point to they're really onto something here. Uh, two or three deeper holes that have discovered sediment hosted copper sulfides, especially hole number 2 that it intersected a wide zone of chalcocite, which is a very, very high percentage copper sulfide rock, right? So you can see deeper down stratiform copper. Okay, so this is the model. You have zinc over here, farther out from the real sweet spot. You have some near surface copper zones where the fluids have leaked up through these faults. But the real honeypot, the real juicy stuff is here in the center, and it's deeper, right? So it might be 200 meters deep, it might be 300 meters deep, it might be 400, meters deep in certain areas, right? So they're still figuring this out. And they also don't fully understand the whole strike extent. How wide of an area is this? How far does this zone extend, right? And so here's the chalcocite. And this is historic core from 2016 holes that show you 8 meters of chalcocite above 4% copper, grades up to 12%. So that's how high we could be talking about here with some of these chalcocite, uh, the holes that have hit good intervals of chalcocite. The grades could be 4% to 8 or 10%. We're probably not going to see a hole that's like 30 meters of 10%, but we could have 30 meters of 4%. Okay. But again, assays are pending for all the holes from Storm this year. We've heard about 4 so far. I think we're probably going to hear about hole 5 fairly soon. But again, this is the concept, right? Uh, the metal bearing fluids come up from a deeper source. They form a higher grade central core that's copper rich, that's got a lot of chalcocite, and then it leaks out to the edges on both sides. You get lower grades the farther out you go. You see bornite, you see chalcopyrite, lower. So this is very high grade copper sulfide. This is still very high grade. This is slightly lower grade. And then you start to get out here pyrite, sphalerite, and you'll get zinc. Just like we see here at Storm, you have the zinc stratiform, the stratiform zinc out here on the edges, much farther away from the near surface copper that has come up through these faults, and the deeper sediment hosted copper in chalcocite and bornite and chalcopyrite, right? So this is the model going down here. So there's a lot of detail here. I'm not going to go into all of it. This is for you to study if you're interested at all. And you can see this is the holes from this year. So we got 15 meters of copper sulfides in hole 1, dominantly chalcopyrite. Then we got 37 meters of copper sulfides in hole 2, dominantly chalcocite. So we know, based upon what we see here, that this is 80% copper and chalcopyrite is 34% copper, that this hole should grade much higher on a copper percentage than hole 1, right? Hole 3, hole 3 was a 1,700 meter step out, so very, very far away. It only hit 2 meters of copper sulfides, but it was the same kind of chalcocite, bornite, the sediment hosted copper that we saw in holes 1 and 2 and hole 10 from last year. And then hole 4, which is not on this map, was drilled somewhere over here, and it also hit the sediment hosted copper, mostly in chalcopyrite and bornite with a little bit of chalcocite. But the fact is that the density anomalies, the lighter red and then darker red areas, are proving to be consistent with the copper sulfide. So the chalcocite, bornite, and chalcopyrite. Their model, their targeting model is working. So far, they're 4 for 4 this year. And actually, hole 4, they purposely drilled on the fringes of this big anomaly because they wanted to test the fault structure here. They wanted to get some information about the fault. And this is another, again, graphic, like a section map, showing this layer, this deeper layer, this new discovery of the sediment hosted copper sulfides. You can see this is the near surface zone where the previous programs, 2016, 2017, 2018, were focused in this area. And American West has taken their own interpretation, and you see hole 1, they drilled through the shallower zone, and they went all the way to this deeper layer. And they confirmed it in hole 2, they confirmed it in hole 3, they confirmed it in hole 4. And that's their plan. Just continue to test these high density anomalies all throughout this area. And again, look at the scale. So that's 1 kilometer. Okay, these anomalies are very large. Okay, they're a very large scale. Um, you know, a deposit that is 1,000 meters by 500 meters by 400 meters that grades 1% is a very, significant copper deposit. Um, you know, you can do the math and you can check the scale for yourself here about what could be possible just in this one area, the storm area, the storm prospect of the project, which is actually has multiple target areas. And this is just the focus right now. The scale is pretty impressive. And you can see, so this is the storm prospect. You can see they have the tornado over here. They have multiple prospects throughout the entire storm copper project. So this is pretty exciting. I don't actually have confirmation of where they're drilling hole 5, but I would like to think they're testing this big high density anomaly over here. I don't have confirmation that they are, but it would sure seem logical to put a hole or two into this one. So that's Bay. I am long this one. Obviously, high risk, high reward, but the fact they have a 20% fully carried interest on a project with this kind of potential scale, this new discovery, it's pretty exciting, and I think that I don't want to throw out numbers, but I think obviously if it's confirmed further in subsequent holes and with the assays, the share price could definitely move higher. American Eagle Gold. So this is not in the Arctic. This is in BC. This is in Western Canada, in a location that is actually not that hard to get to and has pretty good infrastructure and road access to most of the drill pads. We're not talking 4% or 12% copper here. We're talking more in the area of 0.5% to 1%. But again, you would have a much lower cost mining operation here in BC than you would in the Arctic. Much, much easier to get to. And the scale here is also pretty damn impressive. And it's not just copper, there's gold too. So what is going on here? Hole 8, before I quote some number and get it wrong, let me just make sure I get it. 776 meters at 0.5% copper equivalent. I'm going to go fast here. I'm not going to go into every little detail of this hole, but you can see closer to surface, it has a higher gold grade. From 26 meters to 170 is 0.58 grams. And then as it gets deeper, it drops off and gets more down in like the 0.2, 0.3 gram area for gold. The copper grades are pretty consistent throughout, sort of in this 0.2 to 0.27% copper area. And really, what is interesting to me is the drill holes from last year and this year are starting to prove out. Let me see if there's a section map here somewhere. They're starting to prove out a higher grade near surface gold zone. Now, if they can show that this gold zone extends across a wider strike length, that would be a hugely positive sign. Also, if they can prove that there's some higher grade copper zones at depth, if they can sort of find the meat of the system, then that would be a huge game changer as well. So if we look at the first map in the presentation, it's this sort of section map that shows hole 8, which is the one, the first hole of this year's program, 776 meters of 0.5% copper equivalent with the higher grade gold at shallow depths. And hole 11, which is the one I'm most interested in right now, aside from the hole they're drilling right now, which is hole 12. Hole 11 is one that they finished about a week or so ago. and they posted a lot of core picks. So they posted the picks from 8, 9, 10, 11 from this year's program. But of all the holes this year, they posted the most picks of hole 11 that showed a lot of semi-massive chalcopyrite, quite a bit of bornite, which obviously we know from Aston Bay. Bornite's good when you're talking about copper. But yeah, a lot of chalcopyrite, semi-massive chalcopyrite. That's usually going to grade pretty good. That's usually, when we're talking about 0.3%, 0.4% copper grades, semi-massive chalcopyrite's probably going to grade pretty good on that, relative scale. And let's go a little deeper here. Bornite, chalcopyrite. Yeah, it's just very interesting rock. And just look at how many pictures they posted from this hole 11. A lot of bornite. A lot of these pictures show bornite. Pretty much all of them show chalcopyrite. And then I'm going to find it. Yeah, just purely on the sheer volume of core picks they posted, this hole looks particularly exciting. It looks very interesting. And just chalcopyrite all over the place. And that's what you want to see here at the NAC project. We want to see chalcopyrite. We want to see bornite. That's usually going to grade pretty well. Yeah, just a whole bunch of core picks all the way through the hole, and way more pictures of hole 11 than any other previous hole in this year's program. And yeah, usually when you see like bornite, within a vein, chalcopyrite, within a quartz vein, this is what is usually graded pretty well in terms of like half gram gold, 0.2, 0.25% copper, is stuff that looks like this. So I'm definitely optimistic on hole 11. Hole 10, looked pretty good. But again, look at how many pictures they posted from hole 11, versus holes 10, 9, and 8. And actually, they just tweeted hole 12. They tweeted a little bit of chalcocite. So not only do they have chalcopyrite and bornite here at NAC, but they also have chalcocite, which, as we know from the Aston Bay deck, chalcocite would be the best thing that we could see for copper, bornite being the second best, and chalcopyrite being the third best. But looking down here, it seems like the focus has moved to this south zone. And so hole 8 was a step out to the west, but hole 11 is an even wider step out. This is like 120 meters west of where hole 8 terminated. So this is a substantial step out to the west. And if it runs as good as 8 or better, then that's a fantastic sign. It continues to demonstrate the scale of this project continues to grow. And especially if it grades better than hole 8, then maybe this system is getting actually stronger to the west, right? So that's very interesting. I don't have much to say about hole 12 because I don't know much about it. They did tweet a pic of some chalcocite in core, and it seems like they're going to drill this one deeper. So they must like what they're seeing. And then obviously hole 13, which hasn't yet been started, but will be drilled shortly. This one is testing to the west as well. So, I think American Eagle is a very interesting story. And the fact that their chart continues to consolidate above the 22-cent level. It's a sort of a high and tight, you could call bull flag interpretation. I think that's a positive sign. And they did just get another investment from a very large mining company, Teck. So Teck likes the story and continues to raise their stake now up to 19.9% of American Eagle Gold. So well funded, drilling still ongoing with a lot of assays pending from 3 and soon to be 4 holes from this program. That's it for me in this very lengthy video. Again, I own American Eagle Gold, I own Aston Bay, and I own IAG, I Am Gold, and American Airlines and Lululemon on the radar for trade setups next week. Who can do all this? Talk about Fed, macro, go through charts across multiple sectors, talk about precious metals, futures, treasury yield curve, and finish it off talking about chalcocite, bornite, and chalcopyrite and some junior mining stocks. Anyway, if you enjoyed this video, if you found value in it, please hit the like button and subscribe to my channel. Until next time, next weekend, we should have a lot to talk about after Powell's Jackson Hole speech. Have a great week.